It's morning call, 21st of November, 2025. My name is Mark Gardner. We're going to try something different from here on in. I'm going to give you a quick and short summary, and then if you want the detail, you can go and subscribe or to Spotify, YouTube, or Apple Podcasts, or alternatively, you can grab it on Mosaic, which is our platform. But essentially, we've got overnight, tech was smashed as investors dug deeper into those NVIDIA results. We also had payrolls, which is the September payrolls, surprisingly very high, 119,000. A little bit of a counterpoint to that was the unemployment rate was 4.4%, but the result broadly taking rate cuts off the table. But look, the big news was the tech sell-off overall. We had NVIDIA, as you can see here, the NVIDIA earnings result here. The stock went up about anywhere up to 9% at its high. Up to 196, and then it dipped a little bit. Then the earnings call came out and it drifted higher. This was the pre-market session, but then from the open of the day session, it was just belted. The day session open was the worst red candle for the day. Huge volume. It's one of the biggest volume days in NVIDIA since June. The 180 level is really key for NVIDIA to hold here. It was protected into the close. We were watching the market into the close. Someone was very much supporting the stock there because from a technical standpoint, we're going to be, it's in a lot of trouble below 180 at the moment. People will probably be confused about the earnings being so good and the stock coming off. We've got far more detail in the longer form of the podcast. But let's have a look at the market map here. NVIDIA down 3.15%. That's the big one. Because it was up 6%. So we're talking a 9% move here. And all the market darlings of recent time, Oracle down 6, Palantir down 6, AMD down 7, nearly 8, Micron down 11%. They're hit pretty hard. I'm pretty surprised that Tesla was only down a couple. The likes of Apple and Meta's already been belted. Apple and Berkshire Hathaway quite stagnant really because they're sitting on those high levels of cash and they're a bit more defensive. But the only speckles of green really here are in these defensive sectors and Walmart. But that was on the back of a great earnings result. The retailers have been it's been a pretty checkered earnings season for the retailers here. So just wrapping it up, the SPY was up 1 yesterday, but bearing in mind the Nasdaq was up about 1.5% at that stage, so it's going to have to factor in quite a turnaround. While we're not tech based, the SPY was down about 50 odd points or 0.5% or thereabouts, with about an hour to go. But as you can see, we're all down. For the week, these are 5-day returns, but most importantly, the technicals on the dailies now have turned to a strong sell for all of the US indexes, with the Dow the only one holding on to a mild buy rating in the weekly. Actually, the only technical indicators that are still remaining positive out of the 12 indicators that are averaged for these numbers here at the bottom are the 100-day moving average and the 200-day moving average for these indices. We're very close to the 100-day moving average in most of them. A break of that is not a good thing, and the 200-day moving average is quite a long way away. There wasn't much movement in the precious metals realistically. The big news there was uranium. The steam's come out of that, but that was a very hot thematic. Bitcoin down 3.5%. They're blaming leverage. There's a fair bit of anecdotal evidence running around the markets at the moment, but they're blaming the Bitcoin move down on there being deleveraging. And look, this deleveraging part here, as you can see, this is a 10-year chart of how much margin lending and loans for purchasing securities are. We go a little bit deeper into that in the broader podcast, but if we're going to deleverage, it's going to be a pretty large deleverage. So, want to know more? The devil's in the detail. We'll go through the NVIDIA earnings and why they've found holes in it. We'll go through the deleveraging play, And we'll also give you give you an idea of how we're playing the market. It's no secret that we've been saying go back to cash for quite some time. So you can follow us at MPC Markets on Spotify, YouTube, Apple Podcasts. You can also sign up for a free trial, a 1-month trial of Mosaic with all of our recommendation services, valued at about $500, and you can get all the podcasts in there as well. But have a great day, guys, and we will speak again Monday morning.